Hey, this is Johnny Mendez with Buck & Associates Real Estate. I'm a real estate agent licensed here in DC, Maryland, and Virginia. And today I'm going to go over, does a down payment really make a difference? Now, of course, down payments make a big difference to us because we have to save up for the money. But when it comes to your mortgage payment, how much does it really matter? Now, I did a post on my Instagram over the last week about kind of how much you would need to get into a property at the baseline. Of course, there's 0% down programs, but you have to qualify, make under a certain amount of income, jump through a couple hoops. But most people can get a loan for right around 3 to 3.5%, 5% down, and that's a safe amount of money that you can expect to pay when you buy a house. So today I'm going to compare, kind of what you get and how much of a difference it makes when you put down 3.5%, 5%, 10%, and even 20%. Now, before I start, I just want to let you know that as long as you have under 20% equity in your home, you have to pay what's called private mortgage insurance. So this is basically an insurance policy for the bank, so that in the case that you do default on your loan, that they don't take too big of a hit. And, it's just an insurance policy, which, for good reason. If you have very little equity in your house, you have very little to lose. If you only have 2% equity in your house, 3% equity in your house, you don't have much to lose compared to what the bank has to lose. So it's a fair thing, but I just wanted to highlight that, and I want you to be aware of that. And that shouldn't really play into too much of your decision to put down money, because as you're going to see here, spoiler alert, it doesn't really make that big of a difference. So starting off, we're going to use $300,000 as the value of our home that we're hypothetically buying. I'm going to keep all the metrics the same: property taxes, HOA, all that stuff. I'm going to keep them all the same. That way we have a nice, comparison. Starting off, 3.5% down from $300,000 would be $10,500. Your mortgage payment for that would be $1,752.90. So we're going to use this kind of as our baseline. Moving up to 5%, 5% of $300,000 is $15,000, and that's $4,500 extra than our base 3.5% example. So how much does that get you? How much do you save per month when you put down another $4,500? The answer is your mortgage payment only goes down $22 and some change, down to $1,730.06. So as you can see, for $4,500 extra, you're only going to save $20 per month. And you do the math, how long it would take you to get $4,500 saving $20 a month. Now moving up, 10% down would be another $15,000 if we're talking about 10%. So 5% was $15,000, 10% is obviously $30,000. So that's an extra $15,000. What does it get you? Well, it'll drop your mortgage by $76.14. How many months of saving $76 do you need to equal $15,000? Quite a few. So, take that as it may be. Our first example, we're putting down $10,500. This one, we're putting down $30,000. So as you can see, that's quite a big difference. And, you're not really saving a whole lot. You're saving less than $100 a month overall. Is it really worth putting down $15,000, $20,000 more? Of course, you get insulated. You're insulated a little bit more when you put down more money. So let's say you put down 15, 20%. If the market does drop a little bit, you're not underwater, meaning that you don't owe more on your house than it's actually worth. So that's actually a benefit of putting down money. But in my opinion, we're not expecting any huge market drops or anything like that. It could go down a few percent or whatever, but nothing crazy, nothing 10, 15% down, which, it could happen, but it's not something that we expect. So I personally would say, put down what you can afford, and maybe you can use that money for something else. Maybe instead of putting down 30 grand, you can put down 10,500 and use that other money for something else, like fixing up the property, and now the value goes up even more. If you had told me, hey, if I'm putting down another $15,000 a month, it should make a huge difference to my monthly payment. But if you amortize it over 30 years, which what a mortgage is, unless you have a 15 or 40-year mortgage, it doesn't come out to much per month because it's over 30 years. It's a huge time span. And if you chop it up into little pieces, it's not very much per month. So last but not least, I wanted to talk about what happens when you put down 20%. As I mentioned, when you put down 20%, you avoid that PMI charge every month, which is a certain percentage of the loan, and it takes a big chunk of it out. Of it. So obviously 20% down of $300,000 is $60,000, which compared to our original example of $10,500 is what, like you're putting me on the spot here. I can't do the math on camera. But you get what I'm saying. It's a lot of money. How much is it going to save you? So our original mortgage payment with 3.5% down was $1,752.90, right? With 20% down, and this is taking away the PMI. Of course, you have more equity in your property, so the loan is smaller. So, obviously your payments go down. But for another huge chunk of money, you're saving about $375 per month. So with 20% down on a $300,000 house, in this example, your mortgage payment would be $1,401, which is a substantial difference from our 3.5% down example. But so is the down payment. So, take that as you may. Everybody's different. Some people, they want to put down a lot of money on their property, be well insulated. Some people, they just want to have one property their whole life and pay it off. But if you leverage your money and you have a property here for 3.5% down, you live in it, fix it up, whatever, move out, you'll have more money to do other things. I hope this video helps you out and kind of gives you some perspective on how much a down payment really matters. I mean, in my opinion, it's not too big of a deal. As long as you have enough to get the property and the numbers make sense, you can pay your mortgage, why not put down less? It gives you more money for other things like fixing up the property, whatever you want to do. Maybe you have a business, something like that. But take it as it may be. And thank you so much for watching. I really appreciate it. If you enjoyed it, please like, please share. It helps me out a lot. Take care.